Hello, guys. Welcome back to UCFX. Yeah, welcome back to another episode of the Learn the Smart Money Concepts. Here we have episode 5 of the Learn Smart Money Concepts. And this episode 5 is all about the DSY correlation. So in this episode, I'll be teaching you how to use the DSY, which is the dollar index, to trade the USD pairs. That's it, the pairs that actually has USD in them, such as the Euro USD, the GBP USD, the NZD USD, and the rest of them. So here in this video, I'm going to be asking what is DSY. So DSY is actually a short term for denoting the dollar index. Here, what is a dollar index? The dollar index is basically an instrument that shows the strength or weakness of the dollar. So it's here on the trading view. Let me show you. Yeah. So here we have DSY on our screen. You can search it on trading view. You can see it's DSY. It's the US dollar currency index. So basically, having a knowledge of the strength or weakness of the DSY, that's the dollar index, it can actually act as a confluence while you're trading pairs that has USD in them, just like the Euro USD, GBP USD. So let's say if the DSY is about to go up, which means the Euro USD would be in a downtrend. So you can actually use it as a confluence to trade USD pairs, which means as well if your USD CHF if the DSY is actually in an uptrend, which means USD CHF would as well be in an uptrend. So just like every other pair, it can actually be in an uptrend, in a downtrend, or in a consolidation period, as we have here. So basically, it acts as other pairs. It just acts as like a normal chart. You can like a normal chart, you can actually read. So there's nothing hard, using it to trade other USD pairs if you can actually understand what the market is actually doing. So on another note, there are pairs that are actually tightly correlated to the dollar index, and there are some that are not. So we have pairs that are positively correlated to the dollar index, and we have ones that are actually negatively correlated. So the one that are actually positively correlated, this means that whenever you see the dollar index, that's the DSY, in an uptrend, which means those that are positively correlated will as well be in an uptrend. And we have one of them as USD CHF. So when DSY is actually in an uptrend, USD CHF will as well be in an uptrend. Then about the ones that are negatively correlated, which means if DSY is in an uptrend, those pairs would actually be in a downtrend. So we have pairs. I actually have pairs that does exactly opposite of what the DSY does, and one of them is the Euro USD. If you check the chart of Euro USD and the dollar index, you see they're actually doing almost exactly the opposite stuff. Just like you can see on the daily chart of the DSY, if you go to the Euro USD, it could actually be in a downtrend. See, so it almost does exactly the opposite of what the DSY is actually doing. So, and we have other pairs like the GBP USD. When the dollar index is actually in an uptrend, the GBP USD will as well be in a downtrend. We have the Aussie dollar, we have the Kiwi dollar, and the rest of them. So having this in mind, having this knowledge in mind, I think you are way better off to getting high profitable trades. So you can actually use the DSY to add as a confluence to your trading strategy. Maybe if you're not trading the smart money concept, you can as well add up to your any strategy that you might be using. So let's hop into the chart. Let me actually explain how I actually took a trade. I think this month, a trade that I took on Euro USD using this DSY as a confluence. So here we have on our screen is the actual trade that I took using the DSY as a confluence. As you can see, it's just based off the smart money concept, the order block, break of structure, return to discount levels, entry, trade up. So this is actually the trade that I took using the DSY as a confluence. So here is the actual trade that I took. As you can see, I was targeting the lows. So I will be breaking down uh, this pair, how I actually took the trade. So let's hop into the chart. Let me show you. So here we are on our chart. This is the Euro USD. As you can see, the market is quite bearish. If you take a look at the DSY is bullish. So what you should be looking for is sells rather than buys. Although there can be buys, that's actually counter trading, but there are more of sells in the market at the moment. So let me actually show you how I actually spot the trade. As you can see, the market is actually bearish. Just like I've been saying on my previous videos, if the market, if you have determined the directional bias of the market, you have to go down to the lower time frame to spot the recent order blocks that had formed in the market. So if you go down to the 4-hour chart, you will see as well the market has been bearish. So we had a break of structure here. We had a break of structure right there, and we also had another break of structure right here. So having this in mind, I went out to look for the recent order blocks. As you can see, we had this other block right here. This other block took out this low. So after the other block formed, we had the break of structure, as you can see. So you could go down to the lower time frame to actually refine the other block. Let's go to the 1-hour time frame. So here on the 1-hour time frame, the other block is sitting right here. Let me use the 2-hour time frame. Let me first of all mark it out on the H4. So here we are. We have the other block. So after the other block formed, we had a break of structure. So what you'll be waiting for is a return to the other block with liquidity. So before price will actually return to the other block, you need to see liquidity. So if you go down to the lower time frame, the 1-hour chart, you will see. So before all this price action had already formed, here is the actual trade that I actually took. Here is the actual trade. So I took it 14th of June. As you can see, 14th of June during the London New York overlap. So here is our order block. Price broke structure. So we have this order block as our H4 order block. So we're going to be naming it H4 order block. So just like I've been saying in my previous video, you will need to see liquidity being taken out before price will actually return to the order block. So if you go down to the lower time frame, let's say you go down to the 15-minute time frame. So here we are on the 15-minute time frame. Here is our 4-hour order block. So right before price entered into this order block, we had liquidity in form of equal highs, which was grabbed. So as price tapped into our order block, so what next? Lower time frame confirmation. So you're going to be going down to the 5-minute time frame to as well spot a break of structure and a tap into an order block formed in the 5-minute time frame. So let's go down to the 5-minute time frame to confirm our entries. So here we are on our 5-minute time frame. So this is still our H4 order block. Price took out liquidity, that's equal highs. The price took out liquidity, equal highs. So we're going to be using the 5 minutes as our lower time frame confirmation to confirm this trade. So as you can see, price tapped into the H4 order block. As you can see, we had a break of structure here. Was a break of structure, another break of structure. So then after that, we need to wait for price to tap into a discount level. So we take our Fibonacci from the highs to the lows. As you can see, price came exactly into a discount level. That is the 0.786 of the Fibonacci level. This is actually our discount level here. So, and at the same time, you could spot another 5 minutes order block. So after a break of structure, price came back to tap into this 5-minute order block and as well into our discount level. So you could take this trade in the form you can actually place your trade after the tap into the discount level. You place your stop loss just slightly above the order block, the 5-minute order block, and that will be about how many pips? That's about 22 pips. Then you could be targeting lower, lower, lower. So I actually targeted the lows and got about 1 to 2, almost 1 to 3 risk to reward ratio. So this is actually the trade that I took. This is actually how I took it. As you can see, this is the way I've been explaining this smart money concept. So every rule is actually obeyed before I actually took this trade. So let's go back to the DSY how I used it as a confluence for this entry as well. So let's check the date. This was actually 14th of June. So it was actually on the London New York overlap. So let's hop into the DSY and look out for the same stuff. So here we are on DSY. As you can see, the DSY is in an uptrend while the Euro USD is in a downtrend. So if we check here, we have a nice order block that formed inside this area. So as you can see, this is exactly 14th of June. So price tapped into this order block. Likewise, tapping into the Euro USD 4-hour order block. So I had to go down to the lower time frame as well to confirm if that order block would as well hold. So I went down to the 15-minute time frame. So I went down to the 15-minute time frame. As you can see here on the 15-minute time frame, you can see how price nicely tapped into this order block. As you can see, if you take your Fibonacci, you can as well see that price actually tapped into our discount level, the 0.786 of the Fibonacci. Then as you can see as well, price took out liquidity, that's in form of equal lows here, just like the Euro USD, it took out the liquidity in the form of equal highs. So price tapped into this other block. Then we have to go down to the lower time frame to actually confirm this entry as well. So if you go down to the 5 minute time frame, you would as well see an order block right inside this zone. So price came back, tapped into the 5 minute order block as well. Then this is how I actually confirmed the trade. I knew the trade would actually go in my favor. So I know you'll be subscribing to this YouTube channel to get more knowledge like this. So it's actually a privilege to actually give out this kind of knowledge, because most people in their YouTube in their academy, they actually pay for this kind of stuff, but I'm here giving it out for free. So I know you'll be subscribing to help other people to actually benefit from this knowledge as well. So I'll be seeing you on another video. So thanks for watching. Thank you.